Good afternoon and welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Vamakshi Doria and with me is Vivek Iyer. Vivek, the markets have slipped further. It's a 300 cut point as far as the Nifty is concerned. Obviously, given the kind of escalations taking place between India and Pakistan, the mid-cap index too feeling under a fair bit of pressure and the advanced decline ratio in favor of the declines.
Absolutely right. Good afternoon to you, Vamakshi, as well. And however, especially if you're looking at the mid-cap end of the market, there's been quite a bit of an intraday recovery. Both the mid-cap and the small-cap indices have seen, but still trading in the negative territory. We have quite a lot lined up on the show. Let's start off with the top headlines. India responds strongly to Pakistan's aerial attacks on several locations in northern India. And while many hope for a de-escalation of tensions, the nation remains on high alert and ready to retaliate. A meeting between the three service chiefs and Defence Minister Rajnath Singh is currently underway.
Stocks slide as tensions between India and Pakistan escalate. Defence sector players see their scripts perk up in a sea of red.
Amid rising hostilities with Pakistan, the BCCI suspends the Indian Premier League indefinitely.
Well, the Nifty has slipped below the 24,000 mark. The Nifty is trading with a cut of over 1%. The broader indices as well trading with a cut. The mid-cap index down nearly 0.7%. As far as specific sectors are concerned, it is the Nifty Realty pack that is under significant pressure. Look at the cut that is coming on Raymond, Lodha as well as Anantraj. On the flip side, when we look at the PSU bank space, that is doing well in trade today, largely driven by the numbers of Union Bank. Canara Bank also reported its numbers yesterday, the stock perking up in trade today as well. But there are several movers in the broader markets, and in our special segment, Mid-Cap Movers, we now have Hormas to take us through the mid-caps that are moving around in trade. Hormas?
The broader markets are under pressure indeed. They were under pressure yesterday and now too they are under pressure. We'll start off with some of the losers then in the broader markets. Although the mid-cap and the small-cap index both have seen a significant recovery from the lows of the day, but there are plenty of movers on the downside with Sonata Software and an earnings reaction there as well, 6% lower. Raymond, Chola, Indian Hotels all seeing a 5 to 6% cut among the top losers today on the Nifty 500 index. Of course, there are earnings reactions that continue. We are counting down to some earnings in today's session as well. MCX is an earnings reaction, 6.5% lower at the lowest point of the day. Intellect Design Arena's profit almost doubled from last year. You can see the spike after the results, but immediately the stock has given up all of those gains and is back to the day's low as well. And Union Bank is another earnings reaction doing well for itself, 5% higher today. Defense is one theme that has been in focus over the last 2 to 3 weeks. And take a look at Idea Forge is down 70% from its listing high, but is still up around 18-19% in today's session. Zen Technologies too, Bharat Dynamics, Masgaon Dock, and most of the other defense names too seeing healthy gains in today's session. Stocks doing well on the back of volumes in today's trading session. Look at Craftsman Automation, that continues to move higher. KPR Mills ahead of the results is trading with gains of around 1.5%. That stock is up around 20% in the last 3 sessions. And Yes Bank too trading with gains of around 6.75% on very strong volumes. And lastly, stocks that are bucking the trend, some of the other movers in today's session into the real estate stocks, they are the ones, as Vamakshi just mentioned, are trading at or near the lowest point of the day with cuts of around 3 to 5%. Back to you guys.
Thank you so much, Hormas. Quite a few movers, especially in the broad end of the market. So one sector that's clearly holding out very strong is the defense pack. It's a good time to welcome Sudeep Shah from SBI Securities for a quick technical check on the market. Thanks so much, Sudeep, for joining us. First up, how are you looking at the markets at current levels? We've seen pressure and was expected, but do you think you see further downside from here on, or do you see support coming in at lower levels?
Vivek, yes, see, while the markets are right now on a very weak footing right now, a scary footing with respect to all these geopolitical escalations that has happened over the last 2 to 3 days, a cut from 24,600 almost to levels of 24,000. So 600 points almost gone, but we don't know the extent of how this escalation will still continue. So I feel that rather than trying to buy the dip, one should just wait for some kind of resistances to get crossed and the entire situation to at least show us some signs of stability. So coming to levels, 24,300, 24,280 zone will be an important resistance on the upside. Today, Nifty has once again slipped below its 200-day moving average. So I feel 24,250, 24,300 zone needs to get crossed, and then only we should look at having some stock-specific longs, or at least going long in Nifty. On the downside now, 23,800 will be the most important support, being the last important swing low. So 23,800 for me will be the most important number that I would be looking out for. And in case Nifty slips below that, then 23,500, 23,400 also cannot be ruled out.
Sure, Sudeep. Thank you so much for that. This is Vamakshi joining in. And Sudeep, can you help us with some of your top picks?
Yeah, good afternoon, Vamakshi. A few stocks that we like. One of them is from the defense pack, which is Astra Microwave Products. We've seen a decent up move over the last several weeks in this name, and this is after the bigger move right from July 2023 up to August 2024. Post which there was some kind of a corrective move, and now once again the stock is rallying back into its original trend. So what we feel is from the current level, this stock could be bought with a stop loss of 840 on the downside and a target of 940, 960 on the upside. The second stock that we like is L&T, Larsen and Toubro. Now, post its decent numbers yesterday, we are seeing a move today backed by volumes, and the stock is now out of its consolidation zone, which it was there in the last 10 to 15 sessions. So breaking out of a consolidation zone backed by good numbers and strong volumes, we feel that L&T being a large cap stock, which could offer some kind of a security in these uncertain times. So this can be bought with 3370 as a stop loss, and the target on the upside would be 3550, 3600 levels.
Well, Sudeep, so keeping an eye out on Astra Microwave as well as L&T, but I'd like to get your opinion on one more stock from the defense space, that is Bharat Dynamics. Given the kind of situation that is currently underway, Bharat Dynamics has perked up by almost 5%. So what's your opinion on this one?
Vamakshi, I feel the stock is completely bullish right now. Last 5 to 6 weeks, we have seen a good uptrend in this stock, and what has happened is that it has broken out of its consolidation zone above 1350, 1380 zone. So now, looking at the current chart structure, from a short to medium term perspective, I feel 1450 now becomes a very important support zone. And this move, the price action could continue all the way up to 1700, 1750. So this could be added on dips, but from a positional perspective.
Thank you so much, Sudeep, for joining us, giving us your view on the markets, your individual picks, and also answering your questions on a few stocks, especially in the defense space. But moving on, amid the ongoing tension and in our continuous coverage on the India-Pakistan tensions, we also spoke to a whole host of market guests to understand what way the markets will go if the situation continues to escalate. Let's listen to some top voices.
When it comes to the stock market, I think it's only natural to expect there's some volatility during this time. But as you said, markets globally, where you've had such situations, the wars have not tended to have a lasting impact on the market. In the short term, depending on how long the border situation lasts and how tense it gets, whether it de-escalates or escalates further, can have the logical impact. We tend to be fully invested as we are today and remain fully invested. We don't raise cash. If we have any cash, we generally use such opportunities to deploy. But at this time, we have normal levels of cash, which is around 1% in the portfolio.
It seems a lot more concerning. I mean, I think that things are escalating. And frankly, the Pakistani military chief, General Munir, is known to be a bit of an Islamist hardliner. So when we look at the facts, I don't think the civilian government is in control in Pakistan, as it has never been in times of crisis. The reality is that in the past, with a different government, U.S. would be more aggressively trying to play a role in trying to de-escalate. Since this is more of an America First, leadership, they're taking a hands-off role in this. So therefore, I'm not sure who is going to be able to, put pressure to de-escalate? And if there is an external pressure, is there a risk of some miscalculation? So I think that the markets are probably going to continue to see pressure because things do not seem to be settling down.
The only submission to investor will be, don't fall to the propaganda, don't fall to the disinformation. Follow your asset allocation dharma. Our long-term growth story remains fairly intact. And if this war is limited to limited conflict, then probably every correction is a great opportunity to buy. We need all the global allies to come together and pursue Pakistan that this policy of terrorism, this policy of 1,000 cuts bleeding is not appropriate. If we can get a diplomatic solution, undoubtedly it is good. And we will need all the allies to come together. But at the same time, we'll have to keep on also putting pressure in terms of our non-escalatory responses so that finally Pakistan realizes the error of pursuing the policy of terrorism. If we look at near term, the March 25 quarterly results so far has come ahead of expectation. Good results come first, bad results come little later. But overall, the March 25 quarterly results are well ahead of expectations so far. More importantly, foreign portfolio investors have started buying. They became buyer in the month of March from passive side. April was largely passive and little bit active. But in the month of May, we believe it is more driven by active investors. It's a vote of confidence on Indian economy and Indian market, despite this kind of geopolitical situation.
Well, you just heard from some very important voices on how to navigate the volatility amidst the border tensions. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. You're watching Midcap Radar on CNBC TV18. A couple of stocks I'd like to highlight that are not doing so well in trade today. That includes Jindal Saw. The stock is down somewhere around 5% in trade. In fact, today the stock has managed to hit its 52-week low. Joining that stock is Ramakrishna Forgings, seeing a cut of almost 3%. Again, a 52-week low for this stock as well. But apart from that, we also have several earnings reaction as well. Just to add to the list that Hormaz shared with us earlier, Muthoot Microfinance is trading with a cut of almost 11%. Suryoday Small Finance Bank is also down and out in trade, down nearly 8%. And one other stock that is in focus is MCX. Keep in mind that the company reported its Q4 numbers after market hours yesterday. Overall, when we look at the numbers, it's a miss across the board. Of course, we were going in with an expectation of a weak set of numbers on a sequential basis, but it has missed the analyst expectations. Let's look at the revenue. The revenue was down nearly 3%. It came in 5% below what the street was expecting. We'll also look at the EBITDA that saw a decline of nearly 17%. The margins have contracted by over 900 basis points, and that is because the employee expenses saw an uptick of almost 39% sequentially, and the IT and related expenses saw an even higher jump of almost 56% sequentially. Net profit resultantly saw a cut of almost 15%, coming in at 135 crores. When we look at the key internals as well, the number of traded clients declined by almost 9% sequentially to 6.3 lakh. Apart from that, the average daily turnover on the flip side was up almost 5% sequentially, largely driven by the volumes that we saw in the options segment. The premium turnover, on the other hand, saw a dip of almost 9%. The market share has improved by 13 basis points for the company. But overall, when we look at the numbers, it's a miss as far as the estimates are concerned, Vivek. And resultantly, the stock is down and out in trade today, down nearly 7%.
Well, what contrasting fortunes, post results both for BSE as well as MCX. BSE was one of the top gainers, MCX on the other hand, one of the top laggards. But April, I believe, has been a better month in terms of volumes for both of these stocks. But moving on, let's also have a look at what exactly transpired as far as the results of Aarti Industries were concerned. Upasana joins in with the earnings fine print.
Well, the company has reported a good set of numbers. We are seeing a recovery both in Q-on-Q and Y-on-Y basis as well. Now, it was a beat across the board driven by volumes and cost efficiency. Now, coming to the volumes of the company, the segments like dyes, pigments, polymers saw an uptick on a Y-on-Y basis, while agrochem, which is 18% of the company's revenue, saw a bit of a pressure coming in is what the company has indicated. Now, energy business of the company stabilized, driven by higher volumes, but lower margins were seen due to pricing pressures. Now, company has also achieved its FY25 EBITDA guidance of 1,000 crores. Now, coming to the Q4 numbers, the revenue stood at 1,940 crore with an uptick of 10%, which was above our poll. EBITDA stood at 268 crore with a downtick of 6%, which was much above our poll, and margins also stood at 13.8% versus our poll of 13%. PAT saw a downtick of 27% at 96 crores, but still it was above our poll. So overall, we saw good recovery both on sequential and Y-on-Y basis. That's why we can see the stock surging in trade today.
Well, thank you so much for that, Upasana. But let's also pull up the chart for let's also pull up the chart for a bank that has just disclosed its numbers. Dhanlaxmi Bank, that stock is surging higher by almost 4%. Keep in mind that the company's net profit has gone up for 3.3 crores to almost 29 crores. When we look at the asset quality as well, it has seen an improvement, especially on the GNPA part. It has improved, from 3.53% to 2.98%, but the NNPA has sort of deteriorated to 0.99%. Nevertheless, that stock is seeing an uptick of almost 4%. And on that note, let's slip into a very short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back to Midcap Radar. Well, a couple of hours ago, you saw the monthly data coming in from Amphi. Winnie joins in with the details. Winnie, the monthly SIP contribution continues to remain quite strong, doesn't it?
Absolutely, continues to remain strong, and it's the highest level that we've seen coming in ever. Now, before that, look at the overall flows. That has also seen an increase coming in. There's a lot of flows that came in from the liquid funds as well. There were adjustments that were made also during March as well as in April, so factor that in also, but strong flows continue. Equity segment inflows have continued for the 50th straight month. Inflows in the overall for the 4th straight month, slight bit of a decline, but still continuing to be strong is what we're seeing. Last 3-4 months, we've seen a bit of a decline, but overall flows for mutual fund industry, that has sustained at the levels that we've seen. Now, SIP contribution, like you were mentioning as well, that's been the strongest that we've seen coming in. 26,632 crores was the SIP number that came in this time, and this is obviously the highest we've seen ever for SIPs in terms of flows. Overall, important to watch out for in terms of account closures. Now, account closures last time was also there. This time it's a bit higher, 95 lakhs to 1 crores. Mainly this is there due to a clean-up adjustment is what they're doing, and that is why the number is higher. What Amphi has said, that this number will be coming down going forward as well. Let's look at the mid and small cap. That's been very interesting in terms of a trend this time. They have remained stable on a month-on-month basis, mid caps as well as the small cap funds versus the last month as well. Sectoral funds, funds, that has seen a bit of an increase coming in. 2,100 crores was the sectoral fund inflow versus last month, 170 crores. Strong inflows also continue in the Flexi Cap Fund, 13th straight month of inflows that we've seen coming in for the Flexi Cap funds. 5,000 crore plus is what we're seeing there. So keep an eye out on that. 46 lakh accounts, SIP accounts that were added this time, while in terms of overall contributing SIP accounts, that's also seen an increase versus last month. So keep an eye out on that.
Well, thank you so much for that, Winnie. But moving on, the rupee fell on Thursday after tensions between Pakistan and India escalated. To talk more about this, we now have Lata joining us.
Well, the rupee is the outperformer today, and it's probably making up for the big loss yesterday of 1%. Through the second half of yesterday's trading, we had this fall because it synchronized with increasing war escalation news from the border, and therefore you saw this fall in the rupee. Post 2 p.m. actually on Thursday, you continuously started seeing the rupee fall, ended close to 85.71. That was a 1% fall. But this morning there were multiple factors. One has been that the dollar has generally been weak across Asia. So there were a lot of short dollar positions which got covered yesterday. There were residual short dollar positions were less. And today morning, if anything, there was an adverse news because the dollar strengthened on the news of the US-UK deal. So elsewhere, what you saw in Asia was the dollar on the front foot and currencies declining. But in India, because the rupee had weakened excessively yesterday, the rupee ended outperforming most of the Asian currencies. It's difficult to say at this stage whether it was, with some help from the Reserve Bank, but it's quite possible that the Reserve Bank was supplying dollars because it bought a goodish bit when the rupee had become as expensive as 84 to the dollar. So obviously selling at 85.75 or 85.70 was not difficult for the Reserve Bank, and that may have accounted a bit for the strength in the rupee. Today, largely it has been a dollar strength story, but the rupee has been an outperformer.
Thank you so much, Lata, for joining us, giving us a sense of what exactly is transpiring as far as the world of currency is concerned. Well, one particular stock we'd like to highlight as far as the broader end of the markets are concerned is Borosil Renewables. Remember, the company will declare its results early next week, and that stock clearly is outperforming ahead of the results. It's up almost 10%. Borosil Renewables is the stock that we're discussing. Unverified news reports actually indicate that there could be further imposition of an anti-dumping duty coming in on certain components as far as the solar glass modules are concerned. Back of that, have a look at this particular name, up almost 9%. Other couple of stocks that are doing quite well in the session. One of them is Yes Bank. Again, reports are indicating that the boards of Yes Bank and SBI are probably meeting in order to go ahead with the stake sale. At this point of time, it's still not verified, but Yes Bank, on the back of that particular development, is doing quite well. SBI too has recovered from the intraday lows. But with that, it's all the time we have on this edition of Midcap Radar. Just a minute, Vamash, you had a couple of stocks you wanted to add. MCX was one that you're talking about, and it's gone to the sessions low, right?
Well, absolutely. Vivek, in fact, let's also look at some of the textile names. KPR Mills is one such counter. It has been having a fabulous session as far as, the day is concerned. When we look at the stock over the last couple of days, it has managed to gain on the back of India's FTA with the UK. Today as well, that stock is trading with a gain of almost 1.6%. In fact, it has managed to hit an all-time high today. But apart from that, keep an eye out on Interglobe Aviation as well. There have been several instances of flight cancellations going through. Resultantly, the stock has declined in trade. Today, it's trading with a cut of almost 1.73%. In fact, it has been declining over the last couple of sessions. Also, pull up the chart for SpiceJet, because when I last checked the stock, it was reeling under a fair bit of pressure. Apart from that, also pull up the chart for Craftsman Automation. Like to highlight the stock because it has seen, it has perked up in trade in the last couple of minutes. As of now, Craftsman Automation is the stock that I'm talking about. The stock is up nearly 6%. But on that note, that's all we have on Midcap Radar. Your stocks when we return.